So the time is 11 o'clock. Joachim, it's great to have you with me at least. I know that Ingrid's up and about and just entering in a minute now, or hopefully a second of now. But Joachim, it's great to have you with us today. How are your day going?
Thank you so much. It's great to be here, and thank you for inviting me to this webinar, Wilma.
Of course, of course.
Have you been planning this for a long time?
Actually, we have quite a few months, and we are very excited to see it. It was a topic of hot interest, I would say. We have almost 100 that has signed up for this webinar, and let's see how many joins live and how many who would like to see the webinar on demand. Of course, that's always possible. And it's Ingrid, it's great to have you here.
Thank you.
And hopefully we'll get your camera going as well, if possible. That would be awesome. But I will start doing the intro beforehand.
Is my camera not on? Okay.
No, but it's a beautiful picture though.
Does that work?
Let's see. Not yet, but I'll just do the intro, and I'm sure we'll get that camera going of yours. So pricing, is it a complex question? I think it is. Is it all about like supply and demand? Should we be more inspired by B2C, applying a dynamic pricing, or maybe a segment-based pricing? Many talk about annual indexing. Is that the answer? So today we're going to discuss what tools we have, how we should and ought to work with this. And what we know is that B2C is far ahead. And also, I'm very curious to see how we could work with this in a B2B perspective more efficiently. So I'm one of the co-founders to vloxq. We provide with a CPQ tool. CPQ stands for Configure Price Quote. And this company was founded approximately 3 years ago. And one way to succeed with your pricing strategy is to implement the CPQ tool. Therefore, of course, we are nerdy and interested about this topic. So what we want to do is to ensure that we don't leave unnecessarily money left on the table. And when we founded this company, we quickly discovered that many companies out there has troubling with working with this. And we also did a research and found out that 5 to 15% of the revenue is left on the table just due to incorrect quotes. So today, hopefully, we will receive tools, ideas, and also hear horror stories about what can happen if you don't work with this in a proper way and have pricing as your strategy. And since Ingrid is on and off, Joachim, I'm so proud to say that you're our chairman at vloxq, and you're also the CEO of Almi Invest. But please, would you describe a little bit more about yourself and why do you feel this topic is interesting?
Thank you for that short introduction, Wilma. Pricing is, of course, super important because pricing is the interface to the customer. And that's one of the first things everyone is looking for, of course. I've been an entrepreneur I started my first company like 25 years ago, and I've been into the entrepreneurial environment since then. And one of the things struggling the most for most companies is pricing, of course. How do you price the different products especially in order to make sure that you're signaling the value of the product you're selling? So it's not just about finding the right thing, it's about finding a way how we're going to show that the products we're selling are really valuable. They should be the channels of the world, not the other way around. So pricing is super important.
I agree with you. And it's so good to have you here also, Ingrid. We met at the Sociest. It's a SaaS event in Malmö this spring, and you had this great session about pricing. So it's an honor to have you with us, Ingrid. Welcome.
Thank you. And thank you for bearing with me while my tech is not working.
Tech is tech. Everyone knows that. But just in short, a little bit about you, Ingrid, and Ox, and why do you feel that this question is very important to work with?
Sure. So my name is Ingrid. I'm a principal at Ox VC. We are a B2B software specialist investing firm based out of London and Stockholm. And we partner with what we believe are Europe's most promising B2B SaaS companies at the scale-up stage. So at the stage when the go-to-market motion is starting to become truly predictable in the client acquisition, retention, and upsell. That also means it's at the moment that pricing model is starting to be set, even if pricing, in my opinion, is never worth it's done. I joined Ox 3 years ago, but before that, I worked on the revenue side of building startups as VP Marketing and Growth at Volumental, a Stockholm-based computer vision company. And before that, at BlaBlaCar, a large French success story in the startup world, where I spent 2 years responsible for pricing. And to answer your last question of why does this matter, pricing in many ways, it's one of the most underutilized tools that can have the quickest impact in a company in order to lift the company's revenues, valuation, profits. But at the same time, it's the one question that I spend a lot of my days talking to entrepreneurs. And sometimes I ask them, when was the last time they changed pricing? And they know they should change it, but they haven't done so in quite a while. And so there's clearly a barrier to sort of really working with the subject, which is a shame.
Really, I agree. And let's kick it off. So what we should talk about today, of course, the introduction went quite well, I feel. We have why pricing is crucial for your company's success. That's something, I mean, we can really feel that you guys are passionate about this. We have already talked a little bit about it. And we have methods for determining the right price. And also, least but not lost revenue due to incorrect quotes. And let's kick it off with the first one. And we have put it into two statements here. So pricing strategies tailored to your industry, product, and stage, and also then how to use different type of data to make informed pricing decisions. But let's just have a conversation about this. And please, Joachim, from your point of view, your experience as being an entrepreneur, a business leader, working many years with, I would have guessed this topic. What is the first thing that you would like to address here?
This is super difficult because when you're selling more soft things, you can basically charge whatever you want to. And it's very difficult to find the right level. I would say the most common mistake companies are doing right now is when they're charging too little, because it's all about the value you're signaling. And you don't want to be part of an industry that is a race to the bottom. Like when you're searching for a flight ticket, it's always going for the lowest price. And you don't want to be there because you're all going to get screwed eventually. You want to be in a space where you can charge what you deserve for the product. And I'm going to give you a story later on where we almost lost the case because we charged too little. So finding the right balance for the pricing, but also not to be afraid of charging what you really deserve for the products and services you're selling.
And that is a tricky one, especially in these markets. What would be your answer to that?
And you have to be brave. Sometimes it's easier to sell something that you charge a lot for than to sell something that you don't charge for, but charge very little, because you are signaling a value. And the more value you can show, the more money you can get.
That's true. Ingrid, what's your thoughts on this?
I'm going to immediately play off what Joachim said here, and then sort of talk a little bit about how I see the picture as a whole. But to the point that it's actually more dangerous to sell your product for too little money sometimes than too much. And it sounds extremely counterintuitive, but one of the most famous pricing methodologies is called the Van Western-Dorp theory. And it goes out that you go, and it's more used in consumer than B2B SaaS, but you go ask people, at what price, if I sold you this product for below this price, would you start thinking that this product doesn't have any high quality? This is too cheap. There's something wrong going on. The fact that that is one of the recommended ways to understand what is a floor price shows you that if you risk laying under there, your customers won't believe that this is worth their time to buy. They're going to have a hard time thinking that actually the features are real. They might think that, oh, this is a great marketing story, but will it actually help me change the problem? As consumers, but also people in business, we think of it's a price quality ratio. It's not just price that matters. And I think that's especially true actually in B2B, because in B2B, people are making a very rational pricing decision. They're trying to solve a problem that's often quantifiable. And so in general, the pricing, like what types of data can you use to figure out what price you should make? The most common one that people cite is, well, I just look at what my competition's doing. But in doing so, you are assuming that your competition has spent a lot of time figuring out what the price should be, which in early stage startups is not necessarily the case. In a pretty mature industry, obviously, yes, that is the case. Like flight companies, yes, well, other airlines also think about pricing for sure. But so you need to go beyond competition pricing. In general, I split it stage-wise, is that before you have enough customers that you can take a very data-driven approach, then you should really be talking constantly to your customers and prospective customers in what I would call buyer research calls. And that's something we've written about at Ox. I'm sure that Wilma can share more information with everybody listening later. And you're really trying to, what is the value that your, what do people value in your product? How do they think about value? Why would they start using more of your product? And you use that to build the model. Second, as sort of what we see from an investor perspective, if you have very low churn and very high retention, it means that your customers really love your product. You probably have some pricing power. You could increase your prices, and you can specifically find the segments perhaps of your customers that believe that, and that's where you should focus. So that's sort of some thoughts on what are the types of data to look at when you're making pricing decisions.
And we also talked a little about beforehand the customer data and doing those interviews, because now we're more or less saying to people, raise prices. Is that a way to go, or how would you actually go out and about and do this?
I think it's always it's a trade-off of the amount of time that you have to put on this and the sort of accuracy of the results you're looking for. If you have not changed your prices for 2-3 years, and you have customers that sometimes tell you in sales dialogues, oh, that's kind of cheap. Oh, that's lower than I would have expected. You can probably just increase prices 10, 20, 30%, like, and save yourself several months of analysis. If you do have thought about pricing or you have questions on your model, then yes, it is absolutely worth it to take the time to ask your buyers how they think of value. And so you can ask them, what would be a price that's too low? What would be a price that's too high? If we were to flip to a usage-based pricing model, what would you think? Those are sort of some of the questions that take advantage of the fact that these are your users, and they will probably, in aggregate, give you some pretty good feedback.
Great thoughts here. And Joachim, when it comes to methods for determining the right prices, I guess you have a lot of experience here. Would you share some with us?
Well, it's hard to add on to what Ingrid is saying, because I agree very much with what you're saying.
It doesn't always have to be a battle, but it can be.
No, it's not a battle. I think we have a common understanding here. I think it's also a matter of being brave and being bold. There's a famous story in Japan many years ago. Again, this is B2C, but I think it's a great story. And I think it was Levi's, actually. They didn't sell very much in Japan, and the market manager didn't really know what to do. But after thinking about this, they doubled the prices for the jeans, and then they doubled the number of jeans sold. So they quadrupled the revenue in 1 year, because when they had to make this bold decision, they signaled the value, the product became more interesting, and people bought more of it. When I ran a company a couple of years ago, we sold a SaaS solution to one of the biggest banks here in Sweden, and we're very happy because we charged 50,000 Swedish a month. And for us, for that company, that was a huge amount of money, we thought, but it took a long time to close the deal. And after the deal, after we signed everything, the CIO talked to us and said that we really love what you're selling, but we didn't take you seriously. It's way too cheap. So we actually thought about not buying, because you cannot be serious when you're selling this good product at a price like that. And we asked how much could we have charged? 250. So we could have 5 doubled the price when you're selling to the right customers and you have the value in the product. But for us, for a small company, 50,000 a month was a lot of money, but for the bank, it was too little. We didn't catch their attention. So it's very difficult, but I think you need to be brave, you need to be bold. You need to signal that the things you're selling are valuable.
How important is the story here to create this value? Or is it more into the sales process and have really good salespeople doing their homework and understanding the business needs, or the story, or what's most important to be that bold?
Well, I like stories. I think Ingrid, you were talking about Volumental, and that is a great story to talk about. Not just exactly what you're selling, but why you're selling it and the reason for it. And there is a higher value than just the product you're selling. So I think that the story is super important. People love to hear stories. People love to be part of things that are more than just the product or the pricing, but people want to be part of history. People want to be part of the story. So I think if you can package everything into a great story, and even more importantly, if you have a great story from the beginning, it's so much easier to push your products on the market.
And I think one way you can also think about that is that pricing is the outcome of a good job of positioning and packaging. The sort of increase your prices by 20%, that's a sort of act you can take, figuring out what your story is, what the unique way you create value with your customers and bring them along that. That's the way that in the end of the day, whatever the price you're asking for will be easier to be justified. But it's the work on the story, the packaging, and the positioning, which is actually going to be what decreases your sales cycles, because you're speaking to people and they understand it right away. A cheaper price is not going to make your sales cycle shorter.
That is very interesting. I would also like to address the fact of how to work with pricing as a strategy, because when we meet customers, typically they use a spreadsheet. It has grown over years. Someone owns it, and sometimes that person is no longer with them due to, they just changed job or something. So if you Ingrid were to give hands-on and practical advices on how to, as you said in the beginning, it's something that's never finished. We have to work with this on a recurring basis. How should you do this?
So I obviously work with smaller tech companies, so that's sort of the perspective that I can give. But I do think it shifts depending on the size of the company. I would say that honestly, pricing is at the end of the day almost always the CEO's responsibility, because it's the result, as we spoke about, of multiple other things that are coming together: the product, the marketing, positioning and story, and the salespeople execution. And so you can't completely delegate it as a CEO. And I would probably say that until about 40, 50, 60, 70 employees, you're probably also the person who needs to be actually doing the work and thinking about it, because you're unlikely to have the sort of product marketing or product manager expert internally who's also very commercially savvy and thinking about this pricing question. So I would say it's the CEO's responsibility. With that said, obviously it's a multifunctional question. The finance team cares about understanding from a budgeting perspective, if we change prices, how do we think that that's going to change our future profit and our revenues? From a marketing point of view, it's how do we talk about this? How do we package it? How do we think about that? Product, what are the features that we think we should build that might become add-ons in the future? And from the sales team perspective, obviously, they also need to know, well, what can we discount? How are the rules going to be set? So I would say that in some ways, you do actually want a committee that meets every so often and considers this question. But the end decision maker will remain the CEO for quite a while in tech companies.
This is very interesting, because I had the pleasure to have some CROs and a lunch for a couple of weeks ago. And I asked them, who owns the pricing? And they were like, I do. But I were, okay, I listened to a podcast of a quite big SaaS company, and it doesn't have to be SaaS. We talk a lot about SaaS here, but often within SaaS, you have some ownership of this more clearly. Then this person was the CFO. I don't want to mention the company name. So the CFO said, I own it together with product marketing. And I was like, and now you're talking about the CEO. So Joachim, what's your perspective here? Who owns it? And how should you work with this? Should you work on it on a recurring basis, or could we have a battle here? What's your experience?
It's so different in different companies, different, where they're working, size of the company, the product you're selling, the business model, and whatever. I think that someone should own it. That's often a problem, that no one owns the pricing. So I think that's the most important thing. And also one more thing about pricing. I think companies should be proud of their pricing, not ashamed of the pricing. Often company who can talk about how they price the products and services at the first meeting, they show that they're confident in what they are selling. Other companies, they don't want to say anything about how they charge for the products or services until very late in the sales process. But I personally really appreciate when companies who approach me in whatever role I'm having are confident in what we're selling and how they charge and can explain it in a good way. And they also need to explain, of course, why it's a good deal for me. They need to understand my business.
To add on to saying it in a very matter-of-fact way, this is what it is. You don't have to belabor it in those initial conversations, but you don't hide from it either. It just is.
That's great. Okay, we're looking at some other things here, feels like, that we're talking about. Case studies demonstrating costly consequences of errors. Do we have any horror stories here you would like to share with us?
Well, Joachim shared one. I mean, my horror stories come from companies I speak with that perhaps are out fundraising for capital. And I remember one conversation I had, this was a few months ago, again, will not name the company. But I asked them, because they were showing their sort of, in their pitch deck, there was a slide on sort of the average revenue that they got per customer. And I could tell, just speaking, like we'd just gone through the product, it was like, oh, this sounds very valuable. This sounds like it's going to become a core operating system for this type of customer. And I asked them, have you ever raised prices? And they said, no. And I asked them, well, do you think they're too low? And they said, yeah, they're probably pretty low. But at the same time, we're getting a lot of valuable data from the customers. They were also collecting data in sensors that they placed at the customer sites. And I challenged them then. I was like, but why would, just because you're getting data back doesn't mean that you need to discount yourself and take yourself out of the game. You should still tell customers' willingness to pay. And so it's sort of, if you're fighting against yourself, it's going to be very hard to win. You need to think about it from the customer perspective. And you can tell in those conversations too, that when I ask the questions, people know they're not doing the right thing either.
Interesting. Okay, so moving on to the next part here, we have obviously someone should own pricing. Yeah, it depends on what industry and what are you selling, who should own it, but you should work with it on a recurring basis, and you should be proud of your pricing. That is the three things that I've noted down in my head. Is there something else we want to add here to eliminate those mistakes that is very costly? Joachim, you go.
Me?
Yeah.
Okay. Well, I can give you another story. It's a kind of an inverted horror story, because I was on the receiving end of an offer. And it was clearly a mistake, a copy-paste mistake. I was building a house. I got an offer. It was 13 space 00 Swedish kroner. So obviously, there was a missing zero at the end of the quote. And I really like this company, and I want to work with the company. And I realized that it was just a typo. When we're going to send the invoice, of course, they're going to charge me 130,000 Swedish, not 13,000 Swedish. So I didn't really think about it. I accepted the quote. And then a couple of months later, I got an invoice, 13,000 Swedish, not 130,000 Swedish. So they left 90% of their revenue on the table. And I actually forgot about this until we talked about this a couple of months ago, Wilma. So now I feel kind of bad for the company, but they also charge a lot more for other services they provided to me. And they probably overcharged for those services. So maybe it was the right thing to do to only pay this. And this is also a big mistake, that you have so much information everywhere in Excel and in Word and everywhere. And you're always in a hurry, you copy, you paste, you do things. and it's impossible to follow up.
I think that if I can play off that one, it's the part that if you're a growing company, no matter really the sector, initially simplicity is very helpful, and you can kind of do different things with different types of customers. But if you continue doing that too long, eventually it becomes too complex, especially as you have more people in your organization and you need to try to keep everybody on the same page. So there comes a moment when you actually just need to put this down on paper and put everything into a very clean structure in order to, in this case, obviously was a typing error, which is not going to save you by having a better structure. But the number of times that like you shouldn't have, if you have had the question in like the past month of someone asking, wait, how much are we supposed to charge for that customer again? I can't quite remember what we quoted last time. Do you remember? You remember? Don't let that question be a commonplace occurrence in your company. It should be very easy to find that information and everyone know it and have it accessible at their fingertips.
That was a beautiful segue, Ingrid. Thank you so much for that. But that is true. That is a really central role of your pricing in your business. It definitely is the quotes that is sent out. And we've already spoken a lot about what kind of costly mistake you can do. And maybe people that are listening now, our audience, feels that, no, but that is not that common. Guys, it really is. Unfortunately, I have to say it really is. I wouldn't say, we haven't spoken to any company, any size, any industry that don't do mistakes in their quotes. So that is just, I would say the quote is just the end of your pricing strategy. It's when it goes out to the customer before it becomes an invoice. So thank you for that beautiful segue, Ingrid. Would you like to address something when it comes to incorrect quotes or misunderstanding? I know we talked a little bit beforehand about misunderstanding between different departments within a company. Would you like to add something here?
The one thing I would mention is that this is probably the area of the pricing where things can absolutely fall between the chairs, but it's usually sitting between sales and finance at the end of the day. The sales team are the people who are responsible to send out the quotes, but the information needs to be properly recorded in your affärsystem statement at the start, and that is usually going to sit with the finance team. So the sort of SLA, if you will, between those two internal teams needs to be watertight, and they need to be working off of consistent information that's jointly shared.
Yeah, that's true. And Joachim, and when you joined vloxq, we talked a lot about this, and I just want to share some numbers that our research says. So if you're out there and don't know about your numbers yet, please look into them. I would say this is a great advice just to start working with your pricing strategy to understand how the pricing is today. And this, I would say, is the most common and most costly mistake, I would say, that we see in balance with each other. And I think, Joachim, you already shared so many great horror stories about this, but why would you feel as a decision maker when receiving a quote, why is this important? I mean, it's a stupid question, but I would love to hear your point of view at least.
Yeah. For me, it's not just about incorrect pricing, it's also about incorrect terms and conditions and everything else in the quote. And I don't like being embarrassed. And it's super embarrassing if you're gonna, position your great product that you spend a lot of time investing in, and then you're trying to do this wrapper, talk about the pricing, the terms, the conditions, and everything, and then you do it in a bad way. I mean, it's super embarrassing. And you don't signal any kind of confidence in your product, and the company interested in your product or solution, they get super confused. So quality is super important because you don't want to be embarrassed, you don't want to let your customers down, and you don't want to leave money on the table.
And that will be our final word today. Thank you so much, everyone, for joining, and thank you, Ingrid and Joachim, for contributing with your great expertise.
Thank you so much for inviting.
Thanks so much. Have a great day.
Take care.
Bye.
Bye-bye.